Welcome to weekly market research from Fullerton Markets. Let's dive into the latest market trends and insights. NASDAQ. The Trump administration plans to impose a $100,000 annual fee for each H-1B visa, raising costs for companies that rely on foreign skilled workers. The move could hit tech giants like Google and Amazon, as well as startups that depend on international talent. Supporters say the policy protects US jobs, while critics warn it may drive talent to Canada, the UK or Australia, undermining America's tech leadership. With India supplying most H-1B holders, the plan also risks straining US-India relations. Industry groups are expected to push back strongly, and legal challenges may follow. NASUSD on H6 chart. After a strong breakout, the index retested the 24,000 level, turning resistance into support. Now the price has moved past this psychological level and is setting new all-time highs. Caution is advised as a sharp correction could occur. DUR-USD. German Chancellor Friedrich Merz defended the 2025 budget this week, highlighting a €500 billion infrastructure and climate fund and reforms to loosen Germany's debt brake. The measures were billed as a turning point for Europe's largest economy, but growth remains weak after a 0.3% contraction in the second quarter. Economists warn that while defense and infrastructure spending is starting, much of the fiscal space is also being used for pensions and healthcare, which won't fuel growth. Forecasts now see German GDP rising just over 1% in 2026, with only modest benefits for the wider Eurozone. Still, a recovery in Germany could lift confidence and trade across Europe once spending accelerates. EUR-USD on H4 chart. This pair climbed earlier in the week but then faced a sharp decline. EUR-USD is now retesting the 1.1750 level, with former resistance turning into support. With dynamic support and resistance in play, anticipate a bullish continuation in the coming sessions. Gold. Gold price rose on Friday, extending their winning streak to a fifth straight week, as investors digested the Federal Reserve's first rate cut of the year. Spot gold gained 1.1% to $3,683 per ounce. The Fed lowered its benchmark rate by 25 basis points on Wednesday, but officials signaled caution over persistent inflation. The move briefly sent price to a record $3,705 before a pullback in volatile trade. Analysts say the bullish trend remains intact, with some forecasting that gold could reach $4,000 before year-end. Lower interest rates reduce the cost of holding non-yielding assets, while ongoing economic uncertainty has helped gold rally nearly 40% this year. Physical demand also remains strong, with premiums in India hitting a 10-month high despite record prices, while in China widened to a 5-year peak. XAU-USD on H4 chart. Gold fell over 2% from $3,705 to $3,627 following the Fed's rate cut decision, but has since recovered into Friday's close. With dynamic support and resistance, a bullish continuation is expected through 2025. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets.